Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, April 15th. We got a couple of important economic news releases to go over today, and we'll start off with the Consumer Price Index, or the CPI, for the month of March. So we have 0.1% from the previous month of February. Forecast is supposed to remain at 0.1, and it actually went upwards to 0.2%. So this is the one of the gauges. There's three indexes that we look at for inflation numbers. We got the PPI, or Producer Price Index, and that's the wholesale side. And then on the consumer level, we got the Consumer Price Index, and we got the Personal Consumption Expenditure, the PCE index that they look at. And then the other item they look at, the Fed really looks at, is when you strip out food and energy, that creates the volatility in the indexes here. And so they look at the core. This is the main number they look at to strip out the volatility in the market, try to get a better read of where the numbers are at. So again, it was supposed to be at 1.1%, and the forecast was at 0.1, and again, this one went up 0.2%. So typically this could be considered bad news because typically we don't like to see too high inflation, but because inflation's been so low, we're kind of welcoming a little bit higher inflation news because we're still pretty well below the 2% mark where the Fed likes to be at. They typically like to be at 2 to 2.5% range. Anything above that gets to be too much. But right now we're right about, the core is down about 1.7 range, so still very, very low in terms of where inflation should be at. We also got the Empire State Index. This is the manufacturing for the New York region. So we had a 5.6 on the reading back in March, and it was supposed to be, because weather permitting or getting warmer, we should be a little bit higher, going at 8.0, and it dropped all the way down to 1.3. So very, very, very disappointing news right there. So meaning that manufacturing has dropped quite a bit in the New York region. Typically anything above 0 is considered expansion, so obviously there's not much expansion for the month of April in New York region. Anything below that becomes contraction. Now, last but not least, today we got the Home Builders Index. This is the confidence level for new home buildings by the home builders out there. So we had a 47, which is not a good sign. So anything at 50 or above they view as good. Anything below that, it's not so good. So they figured it was going to go up to 50, and it came in at, again, 47. So not great news. There's still this is something we do have to watch for, because this will determine if they're going to continue building new homes and such, and where they view the economy, where the economy is moving. So let's go ahead and take a look at the headline news here. And stock market started off up quite a bit today, and then pulled back after a lot of the data came out there from, it was disappointing, obviously, with the New York Empire State Index, and then also came even further down once the Home Builder Index came in as low as it did. So came in high. Now it's a little bit mixed, and it's, a lot of them are off the highs of so far this morning. And Nasdaq was down, whereas the other two were still up a little bit, but pulled back from where they were earlier in the day. Earlier in the day in Atlanta, Yellen had a speech with a group in Atlanta, and basically one of the comments she made was that she may think that large banks might need a bit more capital, so they may be putting more restrictions on banks to have more requirement capital. These are more for the large banks and more complex banks, but they may roll out some other items also for other banks as well. But this is just one of the comments that she kind of came up with earlier that could play a role into things. And then tomorrow she has a speech later in the day, which could create, depending on what she says, could be a market mover as well. So we'll talk a little bit more about that tomorrow. So let's take a look at the bond market, and right now the bond market is where we left off yesterday. So as you saw, with the red lines, we pulled back a little bit yesterday. Today, we're up about 3 basis points, even though we started down 3 basis points. But as the day goes on, when the money's coming out of the stock market, this could go into the bond market, which could help us see some improvement in the interest rates right now. So it's possible we could have a little bit more pull in terms of improvement today for pricing. All right, folks, thanks for watching. I hope you guys have a wonderful day. Again, rates unchanged from where we left off yesterday, but have room for improvement today due to the current economic data, and then stock market pulling back, which that money typically will go to the bond market for flight of safety, more conservative views there, which could help out interest rates later in the day. All right, thanks for watching. Hope you guys have a great day, and we'll look forward to seeing you guys tomorrow.